I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner who's back, Senor Mr. Nick Hodge, who's also an investor, of course, and the publisher of Daily Profit Cycle. This is the 265th episode of our weekly therapy session that we call Investing in Bizarro World. OJ is dead, gold's at record prices, Bitcoin is surging again, copper's coppering, some juniors are moving. Is it all straight hockey sticks from here on out? We're going to talk about all that. We're going to talk about the markets. But first and foremost, Mr. Hodge, it was great having you out here in the outskirts of Austin, here near Georgetown, Texas. Great to see you and your beautiful family. We experienced totality together, Nick. How are you?
Thanks for having us. It was a good spot to watch it out in the country, firmly in the band of totality. I think... the NASA had a website where you could put in your zip code and get all the metrics. And I did that for your property. And we got just over 3 minutes of totality there. The clouds broke, the heavens parted ways so we could see that. And it truly was phenomenal, right? I mean,
it was spectacular.
When I saw that it was going to be in Texas, I told you that I wanted to bring my family to see it. We got 3 young kids, right? 5, 6, and 7. And so for them to be able to see it, I thought was pretty cool. And I mean, it did it, right? I mean, we saw the corona, we saw the glow. Your friend got some awesome pictures. He did the GoPro thing. And so, I'm not a big, religious or spiritual guy, but I can only imagine what, the ancients would have thought. People that saw this in the past is what I was thinking. You look up in the sky and it's completely blacked out in the middle of the day. It was pretty wild.
It was very, very, very surreal. Definitely a unique experience. For once in my life, we talked about this off air. I didn't have real high hopes for it. I thought it was going to be a lot to do about nothing, and it would get a little dark, and it would be cool. Man, it was awesome. I was blown away. And so thank you, universe, for the one time I'm not the optimistic one in the room, proving me wrong, because clearly it was awesome. The corona was as impressive to me as the actual darkness and the totality part of it. That was just neat. I had never seen it look that way. So no, it was neat to share with friends and close family and close friends. And it's definitely set off a week of bizarroness. OJ's dead. They still never found the killer. Somebody reminded me, if you want a picture of a killer, you could just pull out a $1 bill or a $5 bill or a $10 bill. So I guess some context there, right? There's war on multiple fronts. Gold has surged to new all-time highs, I think, for the last 9 or 10 sessions in a row, or 9 of the last 10 sessions in a row. This within the context of a US dollar index that's telling me there's likely another war materializing somewhere, because there's no way that the dollar index should be at 105.4 and gold be at 23.75. That's serious capital inflows. The dollar's made percent plus moves 2 days in a row. That's a big market, folks. That's a lot of liquidity coming into the US dollar from foreign capital, I believe. And that's usually, I hate to say it, but an indicator of more volatility on the geopolitical scale, specifically on the war front. Thoughts on gold or the geopolitical ramifications of the dollar surging, or anything in general you want to talk about? I'm just happy to have you back, man.
Well, first, I'm glad I could be the optimist on the totality. I thought it was going to be cool, and I'm normally the glass half empty guy, so I'm glad that we made it happen. On OJ, I mean, I saw that earlier. I was scrolling the Twitter, and then I saw that he died. I confirmed that it was real. And I mean, what do you say about that, right? I mean, I was in middle school when that was all going down, and I remember, teachers stopping class and watching the verdict, et cetera. I mean, that was a huge deal, right? In the late 1990s, I remember watching the Bronco chase, all that stuff. And so they're a little too young to remember the, pinnacle of his career, OJ, in college and professional football. But I did get to enjoy him in the Naked Gun series of movies, so that was good. Other than that, I mean, gosh, it's sort of interesting, actually. I'll get to gold in a second. Sorry.
No, I asked.
The criminal versus, civil thing, right?
Yeah.
And it applies, I guess I'll bring it into finance, and then we can move on. Like, this is, banks, settling cases and not admitting any wrongdoing, right? Or snafus that they pay fines for and stuff like that. I'm thinking back to LIBOR or HSBC, you know, laundering money for terrorists and taking their slap on the wrist and continuing to get going. And it's sort of the same with OJ, right? I mean, you found not guilty in the criminal case and then have to, you know, dole out dollars on the back end to pay your penance for what you did or didn't allegedly do, right? And
Probably did it.
I think the killer's probably dead.
I think so too.
We can move on from there. And, you know, the banks keep getting investigated. So I was seeing just today that, you know, I think it was JP Morgan Wealth Arm was being investigated by some government entity. And so this stuff never ends. It keeps on going on. And, you know, that's one of the reasons people have gravitated to gold, you know, over the course of history and in recent times, right, is safety from that system, safety from that establishment, no counterparty risk, et cetera. And so it's interesting that gold continues to go up. I mean, I remember you saying 8 years ago that, you know, at some point the gold is going to go up coincidentally with the dollar and the yields. And so
yeah,
a couple of thoughts here.
I didn't know how we got there, by the way. Like, it was clear to me that for it to have a sustained breakout of this type, it would have to be alongside that. And also, being a fourth turning, you know, reader and follower, it coincided with a period of high volatility. So that's kind of what that thesis was predicated on. But I didn't know exactly how that would play out because nobody has the crystal ball, right?
Well, it's good now. So here's a couple of things that, you know, viewers may or may not have seen. I've been doing a lot of reading the past 2 days because I didn't do a lot of reading the week before because I was on vacation. So for the past recent while, we've been talking a lot about, you know, rates and the dollar and the correlations in gold, right? Are they going to cut rates so gold can go up? Is the dollar going to go down so gold can go up? Because we're used to those tight correlations, inverse correlations, I should add. What's different here is that gold is sort of leading. It's separated itself. We're not talking about can rates go down for gold to go up. We're not talking about can the dollar go down. And in fact, what you just said, right? The market went ahead and raised rates for the Fed. You know, the 2-year yield is back up to 5%, 4.9%. And the DXY is at 105. And so gold has separated itself a bit. The other thing that's interesting to look at is, you know, what is it? So if it's not falling bond yields and it's not falling dollars, like what's driving the gold price? This is an interesting question because if you look at like the ETF flows, they've been out. You know, there hasn't been massive inflows into gold. What's been driving it? Although there has been record gold demand in 2022 and 2023, some of which we've talked about, some of which I've written about, and I'm sure you've written about, and that's central bank gold buying, right?
There's your answer.
Yeah.
And mostly from the East.
Right, from Asia, exactly what I was going to say. So you've got, you know, maybe Chinese government officials worried about the yuan devaluation. You've got clear buying from the retail community in China. And so it's different and it's good. Something has changed materially in the gold sector. And like you said, you head to 24 and potentially to 25. We've gotten to the place now where we're in a gold bull market. And I guess I would talk about silver for 1 second too, because you've asked me a lot in recent months, you know, is silver industrial? Was silver precious? And I was telling you it's industrial. And that's when I was sort of telling you that copper was still going sideways too. Like I wasn't ready to buy either of those two things because if it was industrial, like I thought we were going to have a recession, right? And so even now I look at silver and it's starting to move up. And I say, you know, I look at these people over the past couple of years who are calling for silver to moon, right? And there's always some reason, right? But most recently, it's been an industrial reason. I've seen a lot of talking heads out there talking about the solar demand.
Panels.
Right. And what's going on with solar right now? Solar's super cheap. Clean tech is one of the things that's not working in the market, particularly solar and wind. And so I was just reading an article yesterday before I fell asleep about, you know, overcapacity in China and they're not getting high prices for the panels because the market is so saturated. And so it ain't the industrials that's driving this silver price, folks, is what I want to tell you. And so that's another turn. That's something else that's changed. It's going up for precious metal reasons now. And oh, by the way, gold's at a record and moving higher, but silver is not. You know, silver's at $27 or whatever. What's the all-time high for silver?
Yeah. 50, I want to say,
right? So
it overshot to 50. You got it.
Right. So it's still 100% away from its all-time highs while you've got gold at all-time highs. And so I think there's some makeup ground for silver to occur there. And I often mention Mr. Dines, and so worth doing there. You know, one of his final predictions is that silver was going to overshoot gold in some capacity and in what he called the third wave of the gold bull market, right? And so anyway, I see lots of excitement out there. The gold bulls are clambering. I would caution not to sell. It's still very, very early, right? I mean, I'm looking at things that, are still, again, 100% from their highs. I was looking at Equinox earlier, Equinox Gold, right? I mean, it's a $6 or $7 stock. It was $12 in 2020.
Yeah.
So these stocks have a lot further that they could run.
No, I couldn't agree more. Silver and copper. Hey, girls, y'all got that summer body working early this year. It's looking good out there for you too. So I know, look, copper, we got to talk copper. Copper's at 420. And this,
420?
again, the context matters here, right? Just kind of like with the gold price. It's not rate cuts, because Jerome came out and then basically said, maybe I will, maybe I won't. But then the CPI data comes out and it's like, okay, I'm not doing it right now, maybe later. Jerome's going to talk outside of both sides of his mouth every single time, folks. That's really it. President Biden came in and said, the fuck you're not. We're getting a rate cut this year, bitch. Like, I don't care what the fuck you think you are. Independent Jerome? You're crazy. Maybe I'll wait a month, but you're giving me my rate cut. It's an election season. I don't like it when central banks typically act ahead of elections, because that'd be absolutely clear. That is meant to influence one way or the other, and whatever your political leanings are, I would just rather fair elections. Call me a crazy American, right? 2024, probably not the year for those. Not to say that it's going to happen from the right or from the left, but there's definitely going to be central bank meddling this year, I think, in ways that is pretty unprecedented in past election cycles, maybe multiple cuts. It'll be interesting to see what the market forces out of the Fed as far as a backtrack or just getting creative again with the balance sheet, finding a way to tighten while simultaneously cutting rates. That should be interesting. Back to my copper thesis. It's interesting because the dollar index is at such a high mark, and there's still, kind of like an overall consensus that the global economy is getting better, but it's getting better because things are becoming more expensive, which slows down growth, and there still isn't coordinated global stimulus on a massive scale like we saw coming out of 2010, right after that crisis. So it's interesting to see copper front running what I think is an easing of conditions and more global stimulus. 420 is nothing for the copper price, folks. You ain't seen nothing yet. If you think that the disruptions out of Chile or the disruptions out of Peru recently, Panama, if you think that's going to be the last time that those types of events occur, and you think that all will be stable and that demand will wane and that there's going to be enough, talk to me when copper's at $7 a pound. And again, I could be wrong about that, right? It could be $6 a pound. Heck, it could stay at $4.20 a pound. If that's all that happens, we're going to do really, really well in this cycle. One last point that I got to point out, because I've had several friends, family members, acquaintances, and subscribers write in about last week's Bizarro World episode. I highlighted some gold and copper plays that are up 50, 75, 100% over the last couple of weeks. This is the start of that move. They were wondering why certain plays haven't had that move yet. So if you look at the companies that are making those types of moves, it's either one of two things. They actually had a catalyst that has materialized that has caused a move higher. Think of Moss and Gold with its 51% ownership of Southern Cross Gold and the phenomenal results that project continues to yield. Clearly, a gold price that's up a couple of $100 in a month is going to bode really well for what will be a very profitable mine that has many, many, many millions of high-grade ounces. That becomes more valuable by the day. By the way, they're still drilling. By the way, we're still expecting assays. And by the way, I expect phenomenal results from that project. The second reason that that's happening is the low baseline that these companies are coming out of, right? You have 2-cent companies that are now 4-cent companies. You have $4 million companies that all of a sudden are $10 million companies. Those are still cheap. And don't believe that because you're part of the portfolio that has exposure to precious metals hasn't moved yet, that it won't. What we should be asking the companies that are out there that you own, you should be talking with those companies or your favorite newsletter writer or writers. What are the catalysts that are going to take the companies higher? And I say this because even me as an investor, a speculator, a newsletter writer, and somebody that manages the money for my friends and family, and advises friends and family on money matters, if a company can't crystallize the catalyst in 2024, when gold is at record highs and silver surging and copper's at 420, if the answer is just we just hope things keep going up, then it may be time to reconsider some of those positions. And even if you take a loss, because the last few years have been brutal for a lot of companies, and a lot of companies are sitting on losses, sometimes it's better to reallocate that money into companies that have clear catalysts. You're going to get, the perpetuas of the world that go up 30% one day and then another 15% the next day. And you blink at a stock that's been stuck in purgatory since the birth of your daughter, right? We've been waiting for this permit, Nick, and I'm talking about your oldest. It's been stuck forever. All of a sudden has doubled over the past month or so on some very positive company-specific news, with a nod from the U.S. government that it may provide it a $1.8 billion loan over, a 15-year term on very favorable rates that it can pay back from production. But that takes care of the capex, right? So that obviously is a big-time catalyst that wasn't in the bingo card last year, the year before, but I've actually been positioning subscribers for that event because of the antimony, the critical metal. I wrote a report back in 2016 that said, the salmon and the antimony are probably the two reasons why this project will see a permit. The reclamation part on the salmon, getting them going back upstream, they're front running that. That's happening. A lot of that is happening before the construction of the mine ever starts. And then the antimony becoming more, critical, pun intended. It's very valuable to the U.S. government to have independent supply chains away from China. Those are the reasons I believe Perpetua gets its permit this year, hopefully, after the election, probably. And the reason why I think it continues higher. But those are clear catalysts in the case of like a Mawson or a Perpetua. The companies in the portfolio, they got to have clear catalysts. The ones that don't, sell them at a tax loss after the summer. Definitely not right now, because I think, the tide will lift a lot of boats. So let's get a better price for those boats, even if it's boats with leaks inside of them. Let's rotate into the better ones and start getting rid of and not paying attention to the ones that aren't going to move because they don't know what to do, even in a bull market.
Yeah, a lot of good thoughts there. I've had some similar thoughts in the past couple of days, looking at some of my gold holdings, even ones that have robust resources and cash, and sort of scratching my head and wondering the same thing. What is the catalyst that are going to materialize in the next 6 months that are really going to, spark a re-rating or upside? So well said on a lot of that stuff. You mentioned copper, you mentioned the Fed. A couple of things for me. In early March, I told you copper was going to start to go, and I said it was going to be because of China. It had gone sideways for 12 months, despite lots of calls from Goldman and the Wall Street Journal and Bloomberg frankly, the Legends of Mining, the Freelands, et cetera, saying all the stuff that we knew about, future deficits and declining grades, but yet the copper was refusing to go up. And so when I saw China going up, and that's what I was saying, is I think this, China is going to be the catalyst that allows copper to go up. And lo and behold, I was reading my Bloomberg Energy newsletter this week, a month later, since I recommended copper on the back of China. And it was saying that this time it's different, right? For the past 12 months, people have been calling for copper to go up. What's really driving it now is the reopening of manufacturing in China, which consumes a ton of copper. So that's going to continue to happen. I mentioned Panama. Those mines came offline, like 400,000 tons was Cobre Panama gone. Yeah. And it didn't really affect the market right away. I think the market's now starting to digest those supply cuts and what that means. And then the other thing I'd layer into the copper story is the whole AI chip thing, right? I mean, we always talk about renewables and the grid and batteries, but the other thing that requires a lot of copper is, computers and devices for AI and augmented reality, et cetera. So, and people are also talking about the power needs for AI, by the way. Microsoft is toying with the idea of building its own nuclear plant, which, is not far out of the realm of possibility and was always something we considered in the bull thesis for uranium. So lots of things starting to coalesce around the copper side of things, which is interesting. You also mentioned the Fed for a little bit there. So let me touch on that. Yeah, I mean, this is something we've talked about for months on end. In December,
for years on end.
In December, when we were in Vegas for our company Christmas party, and they had the December FOMC meeting, it was 3 cuts in 2024. And I probably sound like a broken record because I've been harping on this. And then, then he goes on 60 Minutes a couple of months later, and he's like, rate cuts? What rate cuts are you talking about? We're not even thinking about cutting rates. And then, so now you've got this re-inflation, right? After they told you it was transitory in, 2021 and 2022, you got the CPI out here printing 3.8s, which is almost, 100% above their 2% target. You got oil at 85. You got cocoa at all-time highs. You got fucking insurance rates just ripping. I mean, that was one of the prime drivers of the CPI inflation. And so, anyway, yes, they speak out of both sides of their mouths, and that's what I was writing about. So I just finished a foundational profits issue. I was writing about putting the Fed on mute, right, and just letting the market do what the market does, and that's what it's doing, right? I already mentioned raising the rates, and we already talked about the dollar strengthening, and so the market sees the inflation. The market knows that rates have to be higher, and then the market has went ahead and then raised those rates.
Agreed. We have to talk crypto. We have to talk Bitcoin. I had the good fortune of having our in-house expert, Mr. Chris Crow, with me last week. In light of your absence, filled in brilliantly, did a great job. We had a discussion about altcoins and Bitcoin and crypto and how a lot of the altcoins really in a bull market perform like a lot of the juniors in a bull market when the catalyst actually materialize and they're aided by a bull market. And there were so many parallels there. I found it a pretty fascinating conversation, especially if you're someone unlike me that dabbles in both, right? The resource stock is my knitting, for better or worse. That's where I'm comfortable. That's where the bulk of my capital is allocated outside of real estate, of course, which will always be a core portion of, our family's personal portfolio. But really interesting conversation. Really, really insightful thoughts. And, again, I put his service up against anybody's crypto service in the entire space. And look, sure enough, when Bitcoin pulled back to the 62, 63 level, I asked him if it was an opportunity to buy if you were new to the space. And he said, oh, absolutely. Sitting at 71,000 last time I checked, looks poised to surge higher. Your thoughts, Mr. Hodge, on the crypto space and the opportunity that presents itself there? Because again, just me from the outside in and looking at charts, and I'm not the chartist person, but I do know momentum, and I do know liquidity and volume, and I do know FOMO that a lot of the retail speculators get. And again, backdrop and context matters. We have ETFs now where we talked about this last week. You could own a fraction of a Bitcoin or a fraction of, a certain coin. And I think that's going to be big for the retail crowd, much like Costco selling small little bits of gold that end up translating into large amounts of gold for the retail space.
What did I read? They're selling like 200 million a month, or they've sold 200 million worth of gold bars or coins. Costco, I'm talking about.
Yeah, they're also
it was total or a month, but anyway, people are buying those things. That's awesome.
Mm-hmm.
On Bitcoin, so I watched last week's episode. It was great.
Thank you.
I'm going to talk about being a generalist. So I've talked about how I own Bitcoin on like a USB stick, a device that's in my safe. We've talked about that many times. Next to the bullets. I got to remind everybody in case y'all get cute ideas. next to the policies, next to all the things, right? Next to the gold, next to the silver. It's all in there. I've been buying things differently. So a couple of things. And I use Chris as my consigliere. That's like, the Italian, counselor or whatever. So I started buying the HODL. That's the Van Eck ETF. There's a couple of ETFs out there. iShares has one. There's several out there. But I chose the HODL. It had the lowest fees. And in fact, Van Eck is waiving the fees on the HODL ETF.
Nice.
That's a Bitcoin ETF for a year or a couple of quarters or something. Anyway, I'm getting close to a whole coin, Gerardo. I'm going to be a whole coiner because I got my half a Bitcoin in my safe, and I've been pecking away here at this Bitcoin ETF. The other thing I've started to do is diversify a bit out of Bitcoin into some other things, but I've only done that via ETFs, and that's what I want to talk about. So I started buying the ETH ETF. Chris writes a lot about layer 1 and layer 2 coins and how they relate to the infrastructure and how things are built on them, et cetera. And ETH and Solana play a big role in some of that. And so I started buying the ETH ETF, and I'm up. And the other thing that I've recommended to my readers is a blockchain ETF. It's the ticker is literally block, BLOK. And what that does is it holds a basket of crypto miners, crypto exchanges, and crypto ancillary services. So in that ETF, you would find things like Coinbase and MicroStrategy and Robinhood and PayPal and Square. And those are interesting companies to me because I see an increased willingness by Wall Street to adopt not just Bitcoin, but the blockchain into its financial practices. You've had Larry Fink out there a fair amount recently talking up Bitcoin and crypto and its use in the financial system and how it can be used and is an inflation hedge. And so it's interesting that we've talked in the past about DeFi, right? Decentralized finance, and yet it's being, I don't know the right word, it's either adopted or co-opted, depending on how you feel about it. But it's being adopted by Wall Street and financial institutions and being quasi-centralized in that respect. But that's brought a lot of capital, right? And so I've been looking at companies like Square for a while and wanting to buy. That's, Jack Dorsey's other company, the Twitter founder, right? I mean, they're involved in the crypto space, et cetera. And so you can buy those companies all in one basket in an ETF, and I've been doing that. And so the point I wanted to make is I use Chris as a sounding board. I mean, I have direct access to him, so I can just hit him up. But I also use his letter, right? I read about what he's writing about. But I'm not of the mind yet to, buy these coins directly on an exchange. It's just not part of what I do. I buy them in ETFs, and I have them in my safe, as I just outlined. What Chris has been great at, obviously, he's doubled money already, more than doubled, and has made some good recommendations, is parsing out the individual altcoins, the airdrops, the NFTs, the new projects that are getting excitement and, social media fervor and, yes, capital. And so just like people subscribe to you for individual, junior mining picks, if you want to get in on these individual altcoins, which he thinks and which history has shown go up, many multiples of Bitcoin after halving. He's the one that you would want to subscribe to. I was reading his issue just this week, and he was talking about a Zeus airdrop that was, part of the Solana community, and he provided the link that you could go and check if you were part of this airdrop. Some of that stuff is, I won't say above my head because I understand it. I'm just not in that world, but I was listening to your two sons talk while we were waiting for the eclipse, and they were talking about airdrops and altcoins and things like that for sure. And so, how old is your oldest?
25 now, soon to be 26, if you could believe that. I'm dating myself here.
and the youngest?
He's 15.
So those were the two who were talking,
soon to
the
be 16
15-year-old and the 25-year-old. And so this is part of the future. It's part of the financial future. It's obviously being, etched into the stone of the Wall Street firmament with these ETFs, et cetera. And so, again, I would say I would relate it back to like gold stocks in the 60s and 70s. So you have to put in the time to learn some of this stuff. You have to set up the accounts, and you got to follow someone who's done it. And there's not a lot of those people because this sort of sector is so new. It was Bitcoin and Ethereum for a while, right? We didn't have all this NFTs and altcoins really until the past 5 years. So you've got to follow somebody who's learned hands-on. It's not like you graduated with a Bitcoin degree at university. I mean, it's too new for that, right? And so you've got to talk to somebody who's had success in the real world. And Chris has certainly had that with crypto. And so the last thing there is the halving, which by the time you watch this will only be a couple of days away. I pulled up the thing. It bounces back and forth, but right now it looks like April 19th is the day. And so Chris has a new playbook out there for the Bitcoin halving. We just started offering that a couple of days ago, and you should be sure to check that out because, like you say, he's been spot on with his calls thus far. He's been preparing, as he'll tell you, his portfolio for this specific event. And so it would behoove you to check that out if you're interested in some of these types of gains, albeit with risk that altcoins can offer. I mean, it's 90,000% is what he made on Dogecoin, and so he thinks those sort of gains are repeatable here in the next cycle.
Yeah. No. Again, can't say enough about the service. Mr. Hodge, what are you watching this week? Either company specific wise or just trend wise.
So we didn't talk a ton about inflation. I'm interested to see how the market continues to respond to this sort of bifurcation. So we talked about the CPI. It was up at 3.8%, has been above expectations for the past 3 months. But then the very next day, the PPI came out and it was a little softer, right? So I want to see how these Fed governors respond and talk to it. The Bostics of the world, the Goolsbys, the fucking Kashkaris. I want to see like what the sentiment is that they're going to talk about around this 3.5% inflation. I'm really interested in that narrative.
I couldn't agree with you more. I'm really interested to see geopolitically. The whispers are that there's going to be more Middle East escalation from, Iran and Israel. And obviously that has ramifications, just globally. And I was watching Jon Stewart again here this past Monday, and, he was talking to a pretty renowned international correspondent that's an expert in international affairs, which I am not, obviously. And they were talking about the 10,000 children, mostly Palestinian children, that have died during this war that barely gets, certainly is not being mentioned the way it was the first week or two. I mean, you look at some of the footage and it's just complete annihilation, right? And anytime there's 10,000 children murdered, right? Killed, blown up, maimed, you name it. In any conflict, oh God, it hurts my heart, Nick. And then you got to stop and think that, man, is it really worth it, right? And the people that believe that it is really worth it, I would ask for a justification. So the fact that we're now looking at potentially another escalation in the Middle East between groups that have, access to a nuclear arsenal is just not a good omen for, what's already been a pretty hectic, volatile, and in ways, tragic, in a lot of ways, tragic 2024. That's on the societal, geopolitical side. On the market side of things, definitely watching gold, definitely watching the dollar. I'm curious to see what the major indices continue to do, if they continue to rise, as you mentioned, in the face of clearly stubborn inflation. I'm curious to see if this has been interesting, and I wrote about this in the newest issue of Junior Resource Monthly about how I think the West and Western central banks have lost control of the manipulation on the gold price. I think this price is being driven by Asian central banks. I think the East is leading the way now. And a part of why I believe that is because typically the market closes here in Austin, 3 or 4 o'clock, and then everything's dead until nighttime. It's not the case anymore. A lot of the action is happening right after the U.S. market closes, right? And then right when those exchanges overseas are opening up. And that tells me a lot, again, about the capital flow. The capital flow matters because, again, if you think $2,400 gold is something, wait till the West actually, starts saying, okay, well, now China's got X amount of ounces. We need to step it up, right? We absolutely need to step it up if we believe that the dollar is not going to go in a straight line up forever, which obviously it's not going to go straight up forever. So no, all of those correlations or the lack of correlation are absolutely fascinating to me, and definitely watching for that.
Gaza's interesting. I saw the episode. The hypocrisy is pretty clear. That's what he was pointing out. These whatever red lines or things that the U.S. calls out for other countries, particularly Putin and Russia, that they won't stand up or call out against when it pertains to Israel. They always say things like, "We've got to wait and see if it's true. We've got to confirm it. We don't believe that they were targeting aid workers," or whatever it is that we say, right? To just either kick the can or not have to hold them accountable to things that we hold other regimes and leaders accountable to. And, one of the sayings that many people know is it's easy to see who's in charge by those you can't speak against, right? There's something to that effect, right? And so I get that there are ally, but at the same time, the horrors that are coming out of there, and then the pictures and the hypocrisy from our own government is pretty easy to see as well. When you see pictures of bombings and airdrops in the same photo, literally smoking and smoldering buildings with, aid being dropped down behind it, and we're providing all of it. It doesn't make sense, and you can't sort of justify that in your brain. At least I can.
Yeah, providing the aid, providing the weapons, providing the defense contracts, providing the troops in a lot of sense, providing the protection. It's crazy times, folks. And again, unfortunately, I think there's a lot more instability coming Company-specific news. Looking forward to Southern Cross Gold because every time they report news, especially when it's assay-related, it tends to be really, really good news. I couldn't help but notice that Mawson, which owns 51% of that company, is now seeking or advising on a Canadian listing for Southern Cross Gold. I think both Mawson and Southern Cross will continue to absolutely rip. So that is one that if you think because it's doubled here in the past year and is at 52-week highs, if you think you missed the boat on it, I think there's a whole lot of boat left to sail on that one. So definitely watching that. Looking forward to more assays from Patriot. They reported some assays from CV9. They were solid for tonnage. They weren't as spectacular as I had hoped and as many had hoped. But again, it's 18 holes within the context of a brand new system that they had never drilled before. And they got some good hits. I mean, there were definitely some good hits with good grades, just not CV5 level hits, which again, I think for a lot of us Patriot shareholders, we were spoiled off the bat with just 100-meter intercepts, every single news release we were getting that. And so that definitely is not the norm in the business, but I'm curious to see what the rest of the CV5 assays look like. What else am I watching? I don't want to tell you what else I'm watching because I'm still building a position, and we had one that has run up quite a bit. And I'm going to continue to build that position. Subscribers no, but we'll keep it there.
Good.
Anything to add to it, Mr. Hodge? It's been great to have you back. It was great seeing you, as I mentioned. It's getting more interesting by the week, sir. Some of it's great, some of it's not so great, but you got to roll with the punches, right?
Yeah, and look, you got to own this reinflation in your account. My retirement account is back to all-time highs, and that's a function of gold going back up. Uranium got a little spunk in it here in the past couple of days. The ETFs have ticked up a little bit, what I would say back into bullish territory as opposed to consolidation territory. And so the portfolio's looking good. I told you about those Bitcoin and crypto things I own. I won't tell you everything that I own and have recommended, but the account has been moving up over the past few weeks. It feels good to feel semi-right again. And we'll see if that continues. Don't sell too soon, and know when it's time to sort of stand up and ride on the surfboard, right? And I think now is sort of one of those times.
Whole heck of a lot of money to be made, folks. Again, for those of you that believe you've missed this run and this was it, and your particular stocks didn't move, it is early stages. This is going to be, the financial part of it, the money side of it's going to be a really fun process and a profitable one. Not going to get everything right, but we're going to get a lot more right than wrong. And the ones we get right, I think we're going to do extremely well on.
Speaking of getting things right, so this is one thing I was thinking about the past couple of days and that I wanted to mention. You know this, but I just wanted to get it out there on tape. There's information everywhere, right? Everybody knows all the things. We knew within an hour of OJ's death, right? You want to see Rick Rule talk about uranium? Well, there's probably 5 interviews this week with Rick Rule talking about uranium or silver or whatever. And so with the ubiquity of social media and these things, and the camera that's on top of my thing, these interviews with living legends and gurus and stuff are everywhere. And that's great. And that's awesome. But at some point, the information is not action, right? You can consume all the information you want. But unless you click the mouse to buy the things, you're only consuming information. You're not translating that into action. And what was I going to say? You can watch, sort of all the videos you want, and you can, listen to these talking heads. But at some point, the rubber has to meet the road. And I'm not sure that, just the consumption of information is enough to, get you to buy, or specifically, get you to buy the right things at the right time. And that's where, the services that we provide come in. We say, buy this stock at this price at this time. It's not like we were pontificating here in this podcast because it's free in generalizations, right? These are direct actions based on our network, based on the stocks that we own, based on the diligence and the research that we've done. And so it's one thing to hear Robert Friedland talk about how much copper we need and the train wreck. And of course, he wants you to buy Ivanhoe. But there's a bunch of other copper stocks out there, right? And he's not going to say, I think you should buy Antofagasta, or I think that, pure play copper stocks like Southern Copper and Antofagasta are probably going to be a better bet than the hybrids than like Rio Tinto and BHP, for example. Like you're not going to get that level of nuance because they're out there talking their sector and their book, right? And so just a little bit of nuance. A ton of information is great. Glad to see the interest. Glad to see all the interviews out there. But at some point, I start to see the same thing over and over, and it becomes sort of a circle jerk echo chamber, if you will. And so that doesn't sound like a fun chamber to be in. I just step outside every once in a while and do my own thing.
Very well said, Mr. Hodge. I am Gerardo Del Real, along with Mr. Nick Hodge. This was the 265th episode of our weekly therapy session that we call Investing in Bizarro World. I'm supposed to remind you every week to go to dailyprofitcycle.com/subscribe for Mr. Hodges, Mr. Curls, my thoughts, Mr. Fagans, Mr. Stansel, Mr. Borquist, a lot of good free information, independent information on all things markets. I'll leave you with that. I hope you all have a phenomenal week, a phenomenal month, a phenomenal rest of the year. It's going to get a little more volatile from here on out, folks. Tell the people you love that you love them, and go do some fun stuff and go do some things that maybe you think you have all the time in the world for, because one day we won't. So I'll leave you out with that. Have a great one, everybody.
See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.